going to start again because I just realized I've been talking for 30 seconds with the microphone on mute. It doesn't really work, does it? So if you're watching the recorded version of this webinar, it was held live on Wednesday, the 20th of December at 12:30 in the afternoon. So this is a webinar do every week on a Wednesday lunchtime with Aondo, and it splits down into two parts. First of all, we take a look at the markets, see what's going on, and what are the big levels to look out for, where the opportunities might be. It's a bit of a quiet week this week, not surprisingly, with everyone sort of winding down for Christmas, but we'll take a look at what's been going on and what to look out for. And we also do a strategy bit in the middle, and this time around we're going to take a look at the idea of stop losses. I think that is a question or a problem for a lot of people. I think they end up placing what are in effect random stop losses and find it pretty frustrating when they get stopped out and miss out on winning trades. So we'll spend a little bit of time on that as well. So let's just flip this screen over and get started. That noise in the background isn't my my Christmas drinks getting recycled. It's the restaurant next door, if you could hear that. So okay, so I think we'll start off pound US dollar, because of course this is always interesting at the moment because of all of the Brexit shenanigans. We really are seeing it being driven by what's going on in the political world rather than any sort of major economic stuff. But not much has changed, you know, pound US dollar. Let's take a look just to remind ourselves of the bigger picture, the daily chart. So the story for all of this year really has been one of recovery. You know, we've seen the pound, the lows in January where a pound would buy you what, $1.20, and today a pound buys you $1.34. So we've seen 10% bounce back by the pound this year. At the moment, at least, there's nothing to suggest that's changing. You know, we've seen it sold off a bit September, October, sort of faffed around, came back from 136. 130 has been a massive level. So I think, again, going into next year, if we have a fairly quiet end to the year, that's a level to watch. We'll be watching in January if we see any sort of major weakness. 130 is really the big one for this trend. But for now, I think going into next year, we'd expect further recovery. You know, plenty of volatility along the way, with these negotiations apparently kicking off properly about the trade agreement in March. But for now, back up to the old highs, just above 136. If we break through there, I think it really could kick off a much more accelerated recovery. So this is all assuming that 130 is going to hold. But for now, that recovery is still okay. There have been opportunities this week. Well, over the last, well, back to last Friday. This 133 level, this is the shorter term chart. So we're looking at the hourly chart now. This sort of 133, there we go, the lows from whenever that was, December the 7th. And the lows again, December the 12th. There we go, let's just pick up on that. So that was, when was that? Last week, wasn't it? Once again this week, or towards the end of last week, we saw that really vicious sell-off on Friday afternoon, and that was really off the back of the EU saying that trade negotiations won't start till March. So I think there was maybe a bit of disappointment in there for the market, thinking we're going to have to wait 3 months at least to find out what happens next. But it was an opportunity. You know, it got clobbered back from 134.40 down towards almost 133 on the nose. And this week we've seen the market bounce back. You know, we've bounced back 100 points. So at the moment, I think it's a little bit no man's land, pound US dollar. You know, we're just sort of trading in the middle of the recent range. But clearly, any weakness back to 133 looks like a buying opportunity still, I think, for the sort of shorter term swing traders. You know, we could say that the trend off these highs is still intact, this downtrend. So we do have, you know, just it trapped at the moment. But so it really needs, I think, to shake off at least 134.70 to crack this downtrend. But overall, pretty much as it was a week ago, 133 looks like a buy. Selling on approaches sort of 134.50. And I don't know, famous last words, no real drama expected unless we get some crazy Brexit news in the next few days. Let's see what happens. So that's pound US dollar. Let's look at euro dollar, because again, there's been an opportunity, I think, in euro dollar. Let's just flip this over to the daily first of all. So so we have had I think something of an odd finish to the year for the euro against the dollar. You know, the story from April through to September was of euro strength / dollar weakness. So the market went from 106 to nearly, well, to 121. So that's nearly, what, a 15% move in the euro against the dollar into September. Since then, it's got a little bit messy. We had a break below these lows, ended up being a false break, blah, blah, blah. Then rallies back up to here. And I think it's still positive. I think that the interesting move over the last week is what it's done off these lows here. You know, the market have broken higher. That's a positive sign. It sells off. No market moves in a straight line. But over the last week, we have seen the old 117s hold. And that's, I think, really being the opportunity and continues to be the opportunity, you know, over the next few weeks, I think. Let me just take, there we go. You can see just what an important big level 117-ish was. There we go, 117.13 looks like the low from the third week in November. It set up a 250-point rally up to here, up into the end of November, sold off, but look, it's just done a great job. You know, okay, it's not come right back to it. So when was that? December the 18th. That's only a couple of days ago, but did trade down to 117.40 before turning around and bouncing back, and we're now 100 points higher than that level. So I think this looks more bullish than the pound, you know, because you could argue for euro dollar, you know, our little downtrend there, if that was our downtrend, or even that, I suppose, has broken out. We've broken out through these old highs. We've had the pullback, tested it successfully, didn't take out 117, and bang, off we go. You know, if we get some chop over the next few days and revisit these old lows, it looks like another buying opportunity. I think medium term, euro dollar target would be for a run back up to the late November highs, up about 119.50, and then after that, if we flip it out to the dailies, back up towards 121, assuming these old lows down here hold. So I think definite levels in there that have worked, you know, big levels that have worked, logical places to put our stop loss on. Let's just look at one we don't normally look at, but I was looking at it this morning. I was looking at seeing if there was any sort of longer term trades to do. Aussie dollar. So we have looked at this in the past, but Aussie dollar, US dollar, I think is an interesting one. Let me just take that out. So if we go right back to January 2016. So let's just pick up what that trend looks like. Is that actually still going? So it looks, oh, there we go. Perfect. Look at that. It's almost textbook. So so January 2016, we did see, after a big decline, so this is Australian dollar, US dollar exchange rate. After a big decline, we did see it turn its way around, push its way higher, pushed out in the summer of this year to fresh highs for that trend. So if we were looking at this then, that trend's, you know, definitely still up. So this is August, September, when it was trading around about 0.8. And any weakness back to here would have been a buying opportunity. This is what we've had. So just the last week, we've seen strength off that uptrend. So I think this is really interesting from a geeky charty point of view. Let's just zoom in on that bit, because I think maybe with Aussie dollar, US dollar, you know, we're starting to see, maybe, I mean, there's maybe no hurry, but I think it's definitely worth keeping an eye on. We're starting to see that downtrend being broken. Look at the price action. When we haven't had rallies that have lasted very long in Aussie dollar over recent months, but this one is. So this one that started about 10 days ago from about 75, we have seen it break through these highs from that's the November highs, I think, taken out, isn't it? So we've seen the November highs broken. So this does suggest, I think this does add maybe some strength to the argument that the Australian dollar is starting to reverse its recent decline. And also backing that up for fans of the squiggles at the bottom, we do have bullish divergence on the RSI. I think we talked about that in recent weeks, didn't we? Where the market slips to a low and then slips lower still, but our RSI is making higher lows. So it can be a suggestion that maybe the trend is turning. But I do think it's an interesting one. So for me, I suppose if you really wanted to buy it now, I would want my stop loss the other side of these lows. So the stop, so it's the other side of 75 basically, which is 175 points away from where we are now. But if we think this market is going to climb all the way back up here, that's 400 odd points potential profit. So I think for a longer term trade, it's interesting because we're back to this this big old trend. But maybe the more short term traders want to see what happens over the next couple of weeks. If we see it weaken, what's going to be interesting is do these levels hold? So a bounce off these lows down here could be an opportunity to get in with a better risk reward, so a lower level of risk. Which brings me to stops. Let's talk about stop losses, because that's the sort of strategy bit for today. Everyone knows they should play stop losses, but I think in the beginning at least, people don't place them very well because they place them randomly. Let's take this one as an example. So Aussie dollar is 76.77 to buy. So let's say I want to do a trade on the Aussie dollar, and I want to do, let's say I do £1 a point on the Aussie dollar, but I only want to lose 50 quid. So I'm going to put my stop loss 50 points away from where it is now. So 76.25, near enough. So I've got 50 points risk, £1 a point, 50 quid. So I think, okay, that's a sensible stop loss, but it's not. It's a ridiculous stop loss. It's good that you're placing a stop loss, but you're basically placing a stop loss around about here, this sort of area on the chart, 76.20. So you're basing your stop loss off how much you're willing to lose, rather than the chances of the market hitting that level. And I think plenty of people do this. They place stop losses too tight. So they don't want to risk losing too much, which is fair enough, or they're so convinced their analysis is right that the market is going to take off now and is never going to look back. So end up trading with sort of 10, 20 point stop losses and get stopped out all the time. You know, when you're looking at stop losses, you need to forget about the money, first of all. You know, you come to the money when you're ready to place the trade, but we need to look at, okay, if I'm buying here, what needs to happen to the price to invalidate this as a buy? And for me, and I think for anybody really who's looking at this, if it breaks below there, it's not a buy anymore. You know, if we're buying into this trend, that trend is still intact, even if the market drops 100 points from where it's currently trading. Yeah, it's just noise. It's just noise in the market. So I think we need to think about setting stop losses based off these big levels and then trading it accordingly. So if I was a buyer now at 76.76 and I want a stop loss at, let's say, I don't know, 74.90, somewhere down here. So my stop loss is 185 points away. If I only want to risk losing 100 quid, for example, well, with 185 point stop loss, I need to trade at £1.85 a point. Yeah, so the maths of, well, how big am I going to trade this comes in after you've placed the stop loss. So that's a bit of an extreme example. Let's go back to some of these, the pound and the euro we were looking at to see. I mean, I know this is always the easiest way of trading, isn't it? This is the Harry hindsight way of trading, where we look back and think, oh, we definitely would have bought there. But that sell-off on Friday that we saw. So it actually started Friday morning and just carried on all the way through into the close. But if we saw a bit of strength down here, we know that 33 has been a big level. Okay, so let's say we're a buyer, actually even on Sunday night. So Sunday night this week in Asian trading, Sunday night Asian trade, the market opens around about 133.20. So we're going to be a buyer at 133.20 because the open, our argument is, well, the open hasn't taken out that low. That's still an important low. So we're a buyer at 133.20. The obvious place for a stop loss at the very tightest is the other side of Friday's low, because we know that 133 is a big level. So for a buyer at 133.20, a stop loss maybe at 132.80. So we've got a 40 point stop loss. If we only want to risk losing 100 quid, then 40 points, we're going to trade £2.50 a point. Okay, so it's looking at the big levels in the market. If we were looking at this now, I mean, let's say we were going to go short now, pound against the dollar. It's just not what I'd recommend, but let's say we think, actually, I want to go short the pound up here. So the market's traded as high as 134.20. We've seen it trade this morning up to 134.10-ish. It's currently 33.97 to sell. So, you know, let's not just pick our stop loss out of the air by shoving our finger in the air. We want to place it past what is an obvious barrier, and the obvious barrier is that high. Let's just pick that up. That high from a couple of days ago. There we go. So if we're going short now, then we want our stop loss somewhere at the other side of 134.20. And it is obvious, and I think these sort of levels, they should just jump out at you. You know, you shouldn't have to squint at a chart to try and figure out, well, what's the big level here? What does the market need to do to make my trade invalid? So rather than just trading random stop losses, let's look at big levels on the chart. Okay, so pound against dollar, euro dollar, big levels to watch, but we're not there at the moment. Aussie dollar is interesting because it's because it's that big picture, the big picture trade on Aussie dollar, which is now refusing to load on my chart. Hang on a second. There we go. That big level to watch. We'll come back to that, I think, in the next webinar. Isn't until I think it's the 10th of January. So we'll come back and see how this is faring. But clearly, I think this is quite a big break and tying in with that longer term uptrend there on the Aussie dollar. Let's look at some other markets. Let's go and take a look at the S&P. Okay, so what did the S&P do over the last week? The S&P set fresh all-time highs. Why did it do that? Because that's what the S&P does. Every week, the S&P just goes up, and everyone wants to go short, and the market keeps going up. It has been quite incredible. So this is where we are now. So where did we start the year for the S&P? I think it's up. It was up just under 20%. I had to write something the other day, and I think it was under just under 20% for the year to date. There we go. So where is it? This is a weekly chart. So it's gone from about 2230 to 2670. So we've seen what's that, 400 and something point move, 440 point move. So just under 20% in the S&P. We did see some weakness yesterday. Actually, we saw quite, by the S&P standards, quite a big sell-off yesterday, wiping out almost 2 whole days of gains yesterday. But it hasn't lasted long. We've seen the market bounce back overnight. You know, I know I say it every week, but you've got to be a buyer of a market like this, or you don't have to be going short anyway. You don't want to be going short into such a strong trend like this. So it seems incredibly possible that we'll see 2700 before Christmas on the S&P. Any dips, just bring the buyers out. Let's just take a look at some of the levels to watch. You know, if we did have to think about the potential crash, you know, here's the sharper trend in the S&P just from August. So the August trend line is sitting at about 2620. So let's say 2600 is a big level to watch in the S&P. So even if it dropped about 4% from here, 3.5–4% from here, that trend is still untouched. So it still looks like a buy the dips. Maybe next year will be a bit more interesting. It's great, of course, if you're invested and you're just buying holds. It's a perfect market for that. But for trading, it's a little bit boring, I think, the S&P. So look at the FTSE. Same old for the FTSE. The FTSE has bounced back over the last couple of weeks, but it's pretty much the same as it was last week. You know, we're back up. These highs for the year, 7,600 is a big level. We're currently about 55 points below that. It's been a real barrier. So again, actually going back to the old stop losses thing, if you really want to go short the FTSE, it's a good level up here, 75.45. So we're going to go short at 44.5 and a stop loss, I don't know, 76.20. So it's interesting. I think it's interesting up at these levels because it has been such a barrier. But I think, like I say every week, if the market carries on going up, then, or the US markets carry on going up, we'd expect the FTSE to get dragged higher as well. Let's look at the DAX. The DAX, it's boring, isn't it? It's been a little bit boring. So we'll have a look at this in a bit more depth, actually, because we did have fresh all-time highs in November. Market sells off, chops around, starts breaking higher over the last couple of weeks, and has sold off. Now, looking at this should be just a buying opportunity. This is a breakout, and then moving back into the range. So let's take a look at some of the levels to watch. It really is. It's a bit of a crazy market, the DAX, isn't it? It's so volatile. But what would we do here? I mean, it does move and pull back a lot. I suppose we could say at a push. There is our December trend. Okay, so there we go. Let's zoom in on this bit. So there's our December trend. So I would want to be a buyer. The question, as ever, is where does our stop go? logical place, I think, for me, look at these levels down here, December the 14th, December the 14th, December the 15th. Big support down around wherever that is. Let's just click on that. 13,000. Okay, there you go. So that's an easy one to remember. Big support at 13,000. The market still looks a bit weak. It's interesting though. I think we saw a big move first thing this morning. It's just mad. 100-point move it looks like in the first hour this morning, and it started pushing back below that. But I'll be watching for the market to snap back and see some strength coming in, and with the stop loss the other side of 13,000. Let's take a look on the really short-term chart. See what actually happened this morning. Wow, that's the move. So from about 8:15 this morning, the market was about 13,250 and dropped below 13,150 in about 20 minutes. Absolutely crazy market, the DAX. So I suppose an aggressive trades, because we have been back and tested it. An aggressive trade would be a buyer now with the stop loss under today's low. That could be one way of playing it. The more disciplined, patient trade would be just to see what happens if it sells off a bit more and see some strength and stops below 13,000 on the DAX. Let's see, but never fails to be crazy, I think, that market. And the last two, we're going to look at gold and oil. Let's look at oil first. So US oil. Oh, it's a bit boring, isn't it? A little bit boring. It's not surprising because it is that time of year, isn't it? When not much is going on. Oh, that's not a particularly attractive chart, is it? Let's flip that over to an hourly. So just dull. You know, it's ending the year pretty much on the highs for the year, I think, near enough, which is how it ended last year, and then promptly went into decline for most of the months following that. But, you know, it's bullish. It's a bullish finish to the year. Pretty low volatility, as you can see. This is an hourly chart. It's a pretty low volatility over the last day or so. All the oil traders having their Christmas parties, obviously. But strength, you know, support down here ahead of 57, support down here ahead of 56. So even if we did see, you know, $100-point a dollar and a half sell off for oil, it still looks to be a buying opportunity. Okay, so that's pretty much as it was. Now gold, I've not looked at this, but let's see. I am expecting strength to come back in gold, and it looks like I missed it. Let's have a look on the daily chart. Let's have a look. Okay, this is interesting. Gold has been an odd market, I think, in the last couple of years because I think it's still bullish, but it gets these trends, it gets into these trends like that. So that was to March this year, that bit I'm on there. And then it breaks out of them. Then it pushes a little bit higher. So then we have another trend. Then it breaks out of that. You think, oh, okay, I'll draw it again. Then we have another trend, which is the one we're in now. Was in, whatever. And it breaks out of that again. It's really frustrating, but I think the trend is still higher, and it's all about how deep these corrections go. And we've bounced back what, $25 ish off those lows from the 12th of December. I suppose you could argue, oh, I've drawn that wrong, but we get the idea. Okay, so we need to get through maybe 1280 to shake off this weakness. But I think, you know, I think we will see gold move higher again next year. So there you go. That's one of my markets for next year. I think it's going to be gold. Let's see what happens. But maybe we get a bit of strength into here. Maybe we see a bit of weakness, and maybe in January it sorts itself out. But this correction is still in place, even though we've lost that trend in gold. You know, we've not taken out any of the major lows. So I think it's still bullish, but maybe we'll just have a little bit of chop because it's that time of year when nothing is really being traded properly and volumes are thin. But I think it's interesting it's bounced back. What will be interesting, if we get a sell-off again and it moves back to here in a bit of strength, that could be a good short-term trading opportunity. Let's see what happens, but we'll definitely come back to gold in the new year because I would expect it next year to be having to go at sort of $1,400 by the end of the year. Famous last words. Let's see what happens. But we'll do it all the second week of Jan, and we'll see where we are. That's it, I think, for this week. I'm going to start wrapping things up there. So as usual, thanks very much for coming along all this year. I do enjoy doing these on a Wednesday, whizzing through the markets, asking the questions, answering the questions, all that sort of stuff. So thanks for coming along. I hope you all have a good Christmas and a prosperous 2018, and we'll be back the second week of Jan. with the next round of webinars for next year. Okay, thanks a lot and enjoy your Christmas.